Good morning, good afternoon, good evening, whichever part of the world you are, and welcome to the Energy Market Review. A very quick and short review of the global crude market, the natural gas market, and the coal market. This is follow-up of the previous energy market review we did about a week back. So it is built on that. However, if you're new to this session, it shouldn't really be too much to pick up to what's going on and what's being discussed. Great. What you see on the screen is the light crude oil futures as traded on the NYMEX. The near month continuous futures is what you see here. And as we discussed, and as you're seeing on the chart, this is the daily chart, by the way, we had expected that crude would rise. It was consolidating between $72 to $80 a barrel, still in that range, but clearly the move seems to be, and the mood seems to be in a upward trajectory right now, right? Uh, this is both from a short-term and a long perspective. We are probably looking at perhaps crude inching up on a global basis. What we are looking at is 82.25. First of all, 80, of course, and 82.25. And if it can break that at higher levels, right? So definitely at an interesting juncture, this downtrend line from June 22 has effectively been broken. Remains to be seen, of course, as usual with technical analysis, whether it can sustain this up move, this breakout. Technically looking, yes, it has broken the 50-day exponential moving average, very close to the 100-day. And once it breaks that, very likely to face resistance at 82.50 and then at higher levels, right? So that's something to be kept in mind for and looking forward to those higher levels. So definitely good news for all the oil producing countries. Their revenues and profits are definitely going to rise. In tandem with crude oil is our natural gas. Natural gas was showing some very strong hints last time we did the session, which was the bullish divergence on the RSI MACD crossover, also that it would break. And we had mentioned a 2.6 as the level. It has definitely broken that. And you can see that it is taking support at that 2.6 levels. And just yesterday, it has moved up a good 8.8%. Looks like a small move, doesn't it? But that's a good 8.8% move on natural gas in just one day. I think this up move is set to go even higher. We are actually, if you look at it from a very long-term, multi-year perspective, you're looking at a monthly chart right now. Natural gas at its lows was at a level which is like all the way back to 1990s. Right? That's how cheap it had really become. Quite surprising when you think about all the stuff that gets mentioned about crude oil and energy shortages because of Ukraine and Russia and various other geopolitical issues. And even the thing that happened about, the sort of spat that happened between US and Saudi Arabia about Saudi not uh, pumping more oil as the Americans wanted. So in spite of all those scenarios happening in the background, right, natural gas was at those historic lows, 1990 lows. Crude oil, because of this, very amazing negative price that happened in 2020, the charts are pretty much messed up because of that. So anyhow, not going there. But yeah, suffice to say that natural gas, after crashing from 8.7 to almost just 2, that's a huge 75% fall in natural gas prices, now is trending up, right? So a little more misery in terms of, or a lot more misery perhaps in terms of inflation, in terms of energy costs, that perhaps is going to, what shall we say, go spread through the world economy in the weeks and months ahead. Right. Then just looking very quickly just to get a sense of how the global markets are all interconnected and work together. What we are seeing here is the coal charts, and I'm just going to very quickly go through three charts coal on the daily side, right? Just keeping it for about 1.5 years. Just focus on the blue line, right? And what you will see is essentially that uh, um, this is Australia premium coking coal, which is exported on very large quantities from Australia. A big money spinner for the Australian economy, and its price has been steadily rising from a low of 190 to almost, double at around 370 right now. So a steady increase in the price of Australian premium coal. And if I'm not wrong, then India also is a pretty substantial importer of this coal, because a lot of the coal that's available in India is sort of the inferior grade coal, and coal is imported in large quantities from Australia and elsewhere into India. So the uh, price of energy, especially from anything that's derived from a coal burning plant, which is a lot not geothermal, coal fired plant, is quite large in the globe as we speak, right? It's been like that for decades, in spite of all the talk about electric vehicles, etc. Indonesian coal, surprisingly, really not doing much. It's, as you can see, very much in a sideways pattern. Just focus on that thick blue line, and uh, definitely not any good news for the what shall we say, the Indonesian economy per se, right? So Australian coal getting more expensive in the same time frame, but Indonesian sort of squeezing itself sideways more and more. And then if we look at Chinese coal, this is the China premium coking coal as traded on the Singapore exchange. Well, that's also increasing after creating a nice, probably what looks like a double bottom, right? So that's how global energy is for the last few months. Across the board, coal has been getting expensive, and while crude and natural gas are now going up in price in the last few 2 or 3 weeks, right? So we can expect more inflationary pressures on account of higher global energy prices, right? So with that, we come to the end of this energy market review. Um, if you are by any chance energy trader, we would love to hear from you. If you have any inputs, feedbacks, or collaborations, always looking forward to that, and welcome indeed. Thank you very much, and look up in our description for the other webinars that we do and the links to that for the ones that we have done in the last week on Forex, on bullion, on the India market, on the US market, and definitely we'll be doing more on the Gulf market, industrials, and agri commodities in the coming few days. Thank you, and looking forward to hearing from you. Have a profitable week ahead.